Hey Dwight.
Hey Mark, how you doing?
Yeah, not too bad. Um, just think today I'll hand out the book. Um, yeah, I'll put the link in. Well, I'll just remind me. I'll put it in there.
All right, sure. I can drop it in when you're ready as well.
Yeah, the Freedom Trader book.
Mm-hmm. Are you seeing the timer?
I am.
All right, cool.
Hello, everybody. Welcome to the webinar. Welcome to the third of the 4-day live trade execution webinar series, subtitled "How to Capitalize on Monster Moves in the Markets." And we've had some monster moves in the markets for sure. My name is Mark Shawson, the pattern trader. I see Barry just put in the chat box that he bought the IGV puts and made some money. You're welcome, Barry. I've been talking about this all week. I made an embarrassing amount of money today, shorting the indexes, shorting Tesla, shorting Okta, and shorting a whole bunch of things. But more importantly, I'm just going to walk you through some of the emails that I've been sending out. I've been alerting our members to these monster trades in the markets for quite some time. I'm just trying to find these emails. So this is what my outgoing emails look like. And a couple of weeks ago, February 13th, so just 2 weeks ago, I entitled my email "Dead Money." And I said that dead money is an investment term, which you see little or no growth over a protracted period of time. And that was what I was predicting for the stock market. I said for the at least 3 to 6 months, you're looking at U.S. stocks as dead money. And to my mind, I said, this is a best case scenario. While I hesitate to be an alarmist, I am clanging very loudly the alarm bells for many years. Investors have been rewarded by buying the dips. And I said, this has bred a dangerous complacency. Now things have flipped. And I said, with respect to most tech stocks and indexes, I strongly suggest adopting the sell the rallies approach. Now, this was 2 weeks ago when the Dow is not too far off its highs. And today we are collapsing. Every day this week we've been collapsing. And again, this was very apparent to me many weeks ago. So this is the power of what you see in the market. So I'm not looking at what the Fed's saying. I'm not looking at what the analysts are saying. I'm looking at what the markets are saying. I went on to say, based on the prevailing very bearish price patterns inherent in most stocks and now indexes, I think stocks are likely to get decimated. Accordingly, I see a very real possibility that investors could see trillions of dollars of their equity wiped out. And then I was talking about this ETF called the IGV. This is a tech-heavy ETF with all of these bear price patterns. I've been telling you guys to short this thing. And today, the IGV made a new multi-week low. It went below the January lows of 320. We hit about 316 today. So in that email 2 weeks ago, I suggested shorting the IGV at 344. This was already an additional to a trade that I suggested selling it at 355. And today we hit 316. I also suggested at that time 2 weeks ago that you short Tesla. And to my mind, I've been predicting Tesla is one of the biggest bubble markets out there. And I think we're just starting to see the collapse of Tesla. So you can see I had an outstanding short position at 355 in the IGV, et cetera, and also some long pound New Zealand trades. So that was 2 weeks ago. And then just last week, I went on to predict what I call a buyer strikes. In addition to selling, you're just going to get an absence of bids where people just walk away. And now these ETFs, which are run by robots, not humans, they just keep chasing these bids. And if there's nobody there on the bid side, it's just going to chase the market lower. And so this is what's collectively been happening in the markets. I've been talking about this for a long time. And I also suggested on Sunday to short Okta on a limit. You can see that there was a very large range. Because of the large range, usually I should have put a limit. I should have said limit. It should have been a limit order in there. I said here, sell it on a limit order, which is selling into a higher price. And we got filled at 169, and now the stock is trading at 159. So this is what's been going on for the last couple of weeks. I've been predicting this to our members. Here is today's outgoing email. So this is my email that just went out a moment ago. You can see February 23rd to our elite members. Our elite program is a daily email where I send out trades. In this case, I said, all the indexes taken out their multi-week lows. I've been predicting this carnage. And I said, I've already got a full menu of trades that are in sizable profits. So I'm just inclined to sit on these. And you can see that I'm long pound New Zealand. I've been short the IGV. Probably should just blow this up. So these are kind of the outstanding trades right now that I have sent out to our elite members over the last weeks or so. So I've been long pound New Zealand since November 23rd. I got collectively 700 pips in that position. And then about 2 weeks ago, I said, get short the IGV at 355. Today it hit 316. And I added to the short at 344 and it's at 316. So collectively, I've got about $60 of profits. Now I've referred to all of these stock market positions in pips just to equate my currency trades and my stock trades to create an apples to apples comparison. Effectively, there are not really pips in the stock market. So when you see 38, 38, that's $38.13, $27.13. So it's just a way of kind of equating it, but monster moves. I suggested getting short ARK. This is this Kathy Woods ETF, chock filled with, full of these garbage growth stocks that at $125, I predicted this was going to be a $70 stock. And I was wrong because it's already a $60 stock and it'll be a $30 stock. And so I've got about $11 in that. I suggested to our members short Coinbase, and now they've got $16 in that. And then the big kahuna was Tesla, shorting at 850. It now hit 764 today. And also this is the trade for Okta. So collectively 19,000 pips. I don't know what you equate this in stocks, but that is a lot of profit. So you happen to be on a webinar where, there's a certain time horizon and a certain series where I just make a whole bunch of money. And so you can see by making this much money, it can make up for a whole bunch of losses along the way. And this is what I try and do. Identify pockets in the market and hang with trades that are profitable. And I could be with these trades for a long time. So even despite the fact that I've got $86 in Tesla, I think that this is going to go a lot lower. So this is what I've been talking about all week. And now you're seeing it actually happen in real time in the markets. So, it's not a particular genius. I just look at the markets, and to me, patterns equal trajectory. So when we see a bear pattern, the market's going to go lower. When we see a bull pattern, the market's going to go higher. And so for the last 3 days, I've been talking to you about these bearish patterns in all of these US stock markets. This is the triple Q. So this is the NASDAQ. And to my mind, we had hidden in this thing right here was this head and shoulders. It looks just like a man's left shoulder, a man or woman's left shoulder, head, and right shoulder. So we have a head and shoulders in that time frame, and then you have another head and shoulders in this time frame. And so collectively, this whole thing was like a rectangle top. And with the word top in it, once I understand that the market has topped, then it says what? The market's going to go lower. How much lower, in what time frame? Those I don't know. But once I understand where something is going by virtue of the patterns, then I can start putting on my trades accordingly. And then we have a whole bunch of intermediate patterns where you can see right here, you had a double top. This again is just what it implies, where the market makes one peak, backs off, retest that, and now you have this M top. So you have all of these. So this is the primary pattern here, this rectangle top, this head and shoulders top, then you have the double top. And so pattern equals trajectory. So to my mind, even when the market was racing up a couple of weeks ago, when it hit this bottom and it went up about 15%, I mean, that was a very big short covering rally. But I was telling our members every day in our morning program, the Boiler Room, not to chase this rally, not to be infatuated by it, that I felt all the while that while we were going higher, I said, these January lows are coming out. And you can see today we took them out. And so to my mind, it's not magic. Pattern equals trajectory. And so if you want to look at this whole thing now in a larger context, you know, I still listen to all of these yahoos, you know, on the screen here. There's, you know, I got this financial channel here, and, you know, these analysts all day long are saying, this is a great thing. I love when markets come off because they give me buying opportunities. They're not understanding the selling hasn't even started yet. We just really started today. It was really kind of confirmed today, where this was the left side of a large head and shoulder. This is the head, and this is the right side. So again, looks just like a man or woman's left shoulder, head, and right shoulder. But here's the thing about this head and shoulder. So you can see that this head and shoulders has what we call a drooping or sloping downtrend line. If you connect all of these lows, you can see that it's a drooping. So typically you might see a conventional head and shoulders that looks like this, where the shoulders are equated. So you have a horizontal neckline. Now, both of these patterns, a head and shoulders is a head and shoulders. It is a bearish price pattern. What this means is that leading up to the pattern, you had a higher market. And by virtue of it being a bearish pattern, this is called a reversal pattern. So by definition, if this is a reversal pattern, it means that the market is going to get thrown in reverse once we see the formation of this pattern. And so this is a horizontal, so the neckline is simply a line drawn through the pattern. And once it cuts through that neckline, it effectively confirms that this is what we're looking at. So you can see today, we have just come down to this neckline. So while everybody thinks we've had a gigantic sell-off, what this is really saying is that the sell-off hasn't even begun, that the pattern now has just been formed, and now the selling will begin. And I don't think people have any idea of what's coming at them. And, you know, I don't either. It's just that the patterns are telling me that there is something, you know, very shocking afoot here. So people are talking about this as a vanilla correction in a bull market. To my mind, this has the makings of something a lot worse. And I've been sounding the alarm bells to our members for quite some time. So this is the weekly chart of the triple Qs. And again, you see this double top. And I've been talking about these patterns all week. So pattern equals trajectory. When we see a top, it means that the market's going to go lower. Now, it's not to say that the market can't rally. You can see that was a 15% rally. We can go down here. We can have another hellacious rally. But this thing looks like it's going to keep ratcheting lower. So it's a sell the rallies environment, where before it was a buy the dips. Every time this thing sold off, it went to new high, sold off, new high, sold off, new high, sold off. And so there's been this ongoing programming that if you buy the dips, you'll be rewarded. And now people are going to try and do that in this market, and they're going to get killed. Every little, thing here, people are going to say it's, it's going up now, and then it's going to make a new low. And so buyer beware, caveat emptor. So you can see also the head and shoulders on the weekly time frame also. And now we have really just come down to this neckline. You can see this is what I was talking about yesterday. We were just a hair above the neckline yesterday, and I said, we haven't even gotten there. Well, today we got there. And so this is what I've been talking about all week. And, everything I've been talking about, we started the week here, and now we're here just 2 days into the week. Effectively, we've gone from 340, there's 329 on the Qs. And, it looks like the party is just beginning. So now we're at the starting line of this pattern. So despite the fact that we've come down this much, what this pattern is saying is that we're just starting. And so, who knows where this thing can go. Actually, if you look at the IGV, this has been an ETF that I've been looking at all week. And some of you are saying that you've already started buying puts, which is a leverage bet on something going lower. And so this is the IGV. And the reason I've been looking at the IGV is that this is an ETF that only has tech stocks in it. So it's got Microsoft and Intuit and Salesforce and all the heavy hitters. The big companies, the solid companies, so to speak. Microsoft up to now has been the most solid, and it looks like it's rolling over. And that's why the indexes are starting to roll over, because Apple, Amazon, Netflix, Facebook, all of these big stocks that have been holding up these indexes are now rolling over. So now the detonation can really begin. And so all this week, I've been talking about the head and shoulder on the IGV. And you can see this is a little bit ahead of the NASDAQ because it already broke through its neckline. So you can see the action here where you get to the neckline, and now it effectively confirms it. Now, sometimes you'll get a first flush through the neckline, the first, it's like the first soldiers, in a battle or sacrifice, right? So the first soldiers through the gate get all excited. Then we have a retest, and you can see that we came exactly back to the neckline and then failed. And so this now is a very, very ominous thing that we retested that neckline. And you can see now with today's action, we are now under these January lows. So you can see all of these lows here have been taken out by virtue of today's action. And so this is, sounding the alarm bells, and, people who are trying to be heroes and buying this dip are just going to get massacred. So this is what I've been saying consistently all week. If you've been on this webinar, I'm just not just making this stuff up. Now, in addition to the head and shoulders, we also have something called an ascending broadening price pattern. It's defined by a pattern that goes up throughout the pattern. It starts out life in the pattern narrow and then widens or broadens out at the top. So it's called an ascending broadening price pattern. Now, this is typically a bearish price pattern, so that when it breaks the low side, and I showed you the pound Australian yesterday, we know exactly where it's going to come back to. So to my mind, the minimum this thing comes back to is 260. I think this probably overshoots and goes to 230. So, we still have a bit to go. So despite the fact that we've come off whatever this is, 30%, I still think we've got, this much to go, and who knows, these markets can start overshooting. So to my mind, these are very large bear patterns that are effectively just starting. And so this will take, weeks and months of just grinding lower. And, to my mind, this pattern, tells us that we are going lower, so that, any rally is just meant to be shorted. And that's what I was saying to our members. just get in front of this thing, short this thing. I was shorting at 355, then 344. And to my mind, there's, still all kinds of room on the downside to go. So this is what I do in the work at the Pattern Trader. I just look at patterns. I don't care if the patterns are in the pound yen, the Australian versus the Canadian, the euro versus the US dollar, or IBM. Pattern equals trajectory. And that's the beauty of looking at price action. You can apply this methodology to whatever you want to trade. You want to trade cotton in the futures markets. You want to trade corn. You want to trade oil. Everything has a trend and a price pattern that we can, delineate over time. So you'll notice that this is what we call a clean or a naked chart. So from this simple chart, I've been able to extract literally hundreds of thousands and probably over 7 figures in the last 3 months shorting this thing just from a simple picture. I don't have any volume here. I don't have any moving averages. I don't have any MACD going through here. I don't have any fancy Bollinger Bands. There is nothing to tell me, other than this very simple picture. So when I look at a chart, I simply want to get in cadence with what the market is telling me. I want to surrender to the will of the market. So if the market's going up, I want to buy the market. And if the market's going down, I want to sell the market. And it sounds, and it's really as simple as that. And then I just try and find a few setup days where I can really understand the risk and reward. And I call these, days insurance day bars, because when I see this reversal when it makes a new high and close on the low, or this reversal when it makes a new high and close on the low, those bars tell me where to join the trade and how to assess my risk. And so that to me is the holy grail of trading. If we can understand where to get in and what our risk is, then where something's going to go, what time frame, how it's going to get there, those are the unknowns. Those are the things we can't control. But if I can understand, the pattern, the trajectory, and then find these, areas where the risk is, in my favor, then you have an outcome that looks like this, where I'm, holding positions now with hundreds and hundreds of dollars in open profits, hundreds of dollars on an individual position. So, collectively, I'm showing $60 or more than that on the IGV, $11 in ARK, $16 in Coin, $86 in Tesla, and $10 in Okta. So this is what we've been doing all week. I'm going to share with you at the end of this session my book that will really articulate this layered 4-step identification method. So, the first thing is, I basically look at, what is the phase or the condition or the direction of the market. So, if I asked a 6-year-old, what is this market doing? He'd say it's in a downtrend. Then I ask, is there a pattern? Sorry, I'm just doing this very badly, but so that's one. Step 2, is there a pattern? Yes, here's the head and shoulders. Here's the ascending broadening. Step 3, is there, in what I call an insurance day, or in this case, this is a weekly chart. So an insurance week bar. And I characterize these bars in the form of either a key reversal, where I just look at how something closes relative to the high and low. And by looking at this, I can say, earlier in the week, buyers try to take this up. And by the end of the week, the sellers were in control of this market in what is now a downward trending market. So basically then the fourth part of my plan is just to set up an execution where I put a sell stop under something I want to sell, or a buy stop above something I want to buy. So in this case, and I muddled it up here, there was a key reversal right here. you want to basically just put your sell stop right here. And now you will put in the market at 344. And right now it's trading at 316. And so all you have, it's a set and forget. You just put your sell stop in there and then let the market do its thing. So if we know this is going to 270, all you have to do now is sit in this trade. So I have a book that basically articulates it better than this. I have a 4-step methodology that gets you closer and closer to a high probability trade setup. So now we're not looking for perfection. I'm not looking to be right on every trade. But as you can see, if you've got open profits like this, it'll take care of a lot of the little losers along the way. So that's what I look for. I look to take big chunks out of moves in the market. So I've messed this up, and so I'm just going to get out of this thing. So I'm just trying to take a piece out of the middle. So, if I think this thing is going to 270, I'm just trying to take a piece of the middle out of this. And that's how you make money in the markets. Not getting in and out half a dozen times a day, because the costs and the execution and the errors will just eat you alive. So I look to identify a monster move and then just sit in that move. So I can see there's 37 new messages. So let me just kind of, Manure says, what is the difference between a sell stop and a limit order? I don't really want to get into it, but so like Coinbase, Okta, I suggested to our members on the weekend to put a limit order in Okta, and I'll show you on this what the difference is. And I actually caught this thing perfectly. So this is a crowd, a cybersecurity firm. With Russia attacking Ukraine and cybersecurity, I think these stocks would be really hot, and they're just selling off like hotcakes. So the difference between a sell stop and a sell limit is a sell stop is a resting order underneath the market. So this would be where the market's closed. So a sell stop would be a pending or resting order underneath the market, and a limit order would be something above the market. So you can see that last week we had a very large range in Okta. So, typically when you have these big bars, you typically get back, a little bit in the range that occurred before. And since I thought this was a bearish thing, I said, just put a limit at 169.87. Now, the problem why I usually do stop orders is because I look to confirm momentum, right? So, in the case of this, with the green line being the stop order, what I look to do is, use the momentum to confirm. So once it triggers that stop order, the stop order becomes a market order, and now I've been put into the market. Now you can see in this example, if I put a limit order, but not a stop order, I would have missed this market. So, I would have anticipated that this goes up, but it didn't quite get to where my limit order is. So, who knows how far this thing's going to go up before it reversed. And it turns out I, approximated it pretty well and got in right as this thing hooked up, got short, and then today collapsed. But I typically do stop orders because I want to confirm the momentum. And you can see that limit order has all kinds of problems. You're predicting how high it's going to go, and then it's going to stop there and then go in your direction. And so I typically don't do limit orders. But in this case, I did because the bar was so large and ended up getting into it perfectly. So in the case of Okta, it opened higher yesterday, hooked me into the trade, and now we're making new lows. So it turned out it was perfect, but usually I do stop orders. Well, I do a pending or resting order, and that way I don't have to think about it. So if the market opens up and continues going higher, no harm, no foul. I'm not put into a bad trade, and I just cancel my trade the next day and look for another trade. But, what I like about these stop orders is that I can just stick them in there, and then the market can do its thing. I don't have to watch the screen till my eyeballs bleed. And then, if it turns at 2 a.m. while I'm sleeping and then hits me in, then I'm put into a good trade. So, the stop order puts me in at the time and price when the market is ready to go through that. But once we're looking at Okta, why I suggested getting short was that there are all kinds of bearish price patterns. This double top here, where you make a new high, back off that high, retest, and now you've got this giant M top. Now, this is a good example of the vagaries of trading, for lack of a better word. So I saw this thing, and I try to short Okta here, and I try to short Okta here. And, I lost a whole lot of money in these phases of the market because I was using this as a barometer. I thought, well, this is going to collapse. And, the thing with the market is that it has its own time frame. So you see these sell fix signals, and then it took like a year before this thing went in the direction that was articulated. But before it did, it had another double top right here, head and shoulders. And so you had a series of these bear price patterns. And so again, just like Tesla, a collection of all these price patterns. So pattern equals trajectory. And so one way or another, this thing is going to go a lot lower. So, I kind of suggested to our members, sell this thing on a rally into this week. And it's exactly what it did. It opened higher yesterday, and then today it collapsed. So I just use, price action and try and, get into my trades in various ways. But it all comes down to understanding, what side of the trade. And this, again, is a weekly chart, right? So each one of these price bars is 1 week in time. And this chart goes back to, 2019. So this gives me some history. It gives me a bird's eye view. It gives me a global view of what's going on. If I just look at a 15-minute chart and all I'm seeing is this, how am I going to make a determination one way or another? It's just a gamble. But by looking at this whole thing is a top. This whole thing is just a rounding top. This is all distribution. This has all been 2 years of selling. And now you're just going to get nothing but net on the downside. Everyone's asking about the insurance day bar. Again, I'm going to share with you my book in the meantime, and you can, see what I mean by. So an insurance day bar it's really my slang. It's, my verbiage. If somebody uses out there, they're just stealing it. To my mind, there are, two forms of an insurance day bar. So these bars, remember, are the third step. So after I've seen the phase or the direction of the market, after I've identified the pattern that is governing and dictating the direction, then I look to whittle it down to a couple of days or a day where I can get in, where I can understand my risk and how to join the trade. And so the definition of an insurance day bar is, twofold. One is the key reversal, where you make a new high and you close on the low. And then the other is the inside bar, where literally the range from high to low of this bar sits within the range, the high to low of that bar. So basically, once I understand the direction, so now I see the pattern. And then I see this key reversal, makes a new high, closes on the low. And then I see another bar right here. This is an inside bar. You can see that this week, the range literally sits within the range there. So what I can do is basically put my sell stop. This is the last part of the layered stair-step process, is that I can just put my sell stop right underneath the low. So you can see, like earlier in the week, the market opened higher, drifted, for a while, and then put me into the market, and now I'm in this trade. And so it's basically a layered approach where I use one thing that builds on another. Now, some people, just, see a key reversal like here, this is a key reversal here. And I say you can't just made a new low, close on the high. And yeah, you did get a bit of a peak, north of that, but before you could breathe, it's in your face. So you can't just fire at every reversal you look at. You have to understand what is the trend, what is the pattern that is dictating the direction. The market will give you all kinds of misdirects along the way. And, if you're just firing at everything, eventually it'll just cave in on you. So to my mind, this is the governing pattern. This is the direction. And so I'm always looking to get short. So if the market rallies, I'm just going to sell into that rally. And this is what I've been advocating, a sell the rallies approach, for the last 3 months. So every rally, sell it, rally, sell it, rally, sell it, rally, sell it. So Mehmet says, do you think to short the indexes level or waiting for rallies to be better? It's hard to say. I mean, these things could just start collapsing. So I don't recommend chasing trades. It's always better to, wait for, an area where you can understand your risk. But, these things, are likely just to get going now, and they can start picking up a lot of steam, as they start breaking out of here. So you can see every day there is a bit of a rally. Today we had, a 500 pip rally before it dropped. Yesterday there was a rally before it dropped. So, sometimes you'll just get this gap open, but I wouldn't chase them. Graham says, do you think investors are going to move their money to gold or commodities? So I try not to think. So, and I really try, I don't mean to be cavalier, and I don't really use that as a joke. And that is the hardest thing as a human being, because I've got by nature a very curious mind. I like reading, I love history, I like looking into things, but I feel like actually knowledge is like is kryptonite to good trading. What you need to be a good trader is to be completely objective and agnostic. Agnostic meaning you have no opinion. You have no opinion what the Fed is, what inflation is going to do, if there's supply side problems. You just have to surrender to the will of the market. And if you listen to all of these guys all day long, they are using their intellect. They are telling themselves stories, and they talk themselves into these positions, but the market is telling you, objectively, you just need to surrender to what the market is telling you. And I've been, saying, even when the market was going straight up, it never had a sell-off. All during this thing, there wasn't one downtick. It was like breathtaking. And that's the nature of short covering rallies. They won't let you out, and they are hellacious. And that's the thing, you can really be burned by short covering rallies. So the market can come down here and then do one of these and, really burn you. So that's why I say you really shouldn't chase these markets. It's, understanding. So why wasn't this a double bottom? You can see these nice Q reversals. You can see this nice double bottom. And to me, this is the controlling pattern. So the market will always throw you head fakes. And it's just a lot of experience that, I've learned to understand how to separate, the head fakes from the real moves. But the idea, Graham, is really not to think what oil's doing, why people are doing it, is the Ukraine war going to break out? What's it going to do to the stock market? I think in terms of risk and reward. Where do I get in and what is my risk? And you can see as this thing keeps motoring down, it's harder and harder to understand your risk. What I like to do is get in right as something is turning, and then I can understand, if I get in here, this is my risk. So, all you can do at this point is wait for these rallies and sell into them. And you can see they come, every day there's a rally, drops, rally, drops, rally, drops. But what most people do is say, well, this feels like this is sold off. I've watched the NASDAQ go up, straight for a year. Now this is a buying opportunity. And so a lot of people will try and buy these dips and then they'll just get hammered. So, how do you manage when a trade when you change the stop loss to secure? So every trade has its own parameters. The stop loss and the take profit is a function of each trade. So sometimes I'll do counter trend trades where I will get long here and just look for a short move and take a ride, on the other side. And then I'll hop on the bus when I know it's, going in the direction that I'm looking for. But each trade has its own stop loss, take profit. So for instance, Tesla now, I've got $86 of profits in it, but I'm not looking to take profits. I think I've told people, I think this is going to go to $500. I really think it could go to 200. And people think that I'm insane. I've been saying this for a long time, but I've been, talking about Tesla as the biggest parabolic implosion that, we've seen. This is probably one of the biggest speculative markets since like the tulip bulbs. I talked about tulip bulbs in Holland. They went to $75,000. These markets get out of whack, and this is a market that has gotten entirely out of whack. So we call these things parabolic markets when it looks like a hockey stick, and usually they end the same way they go up. And to my mind, this is a parabolic implosion waiting to happen. And I talked about this long-term uptrend line all week, and you can see this week, today, we started to cut through it. So now we are on our way lower. You can see how for all this time, we've been hugging this thing. This is the first time that this thing is now sneaking under this long-term down, uptrend line, and then ignore it at your peril, because this thing is going to come down like a ton of bricks. I talked about this Eve and Adam double top. And it's simply an Eve is defined when you have multiple attempts at one resistance level, and then an Adam is you have the single. But either way you look at it, this is a vanilla double top. When you look back, this is an M top. When you see this here and wonder, how did this get there? You'll know that it started off with a pattern that told you exactly what was going to happen. So this isn't magic. You don't have to look at what Elon Musk says or what some analysts, all these analysts have put $1,500 price targets on Tesla. Kathy Wood, who owns the ARK Fund, has talked about Tesla going to 3,000 a share. And you hear all of this garbage. And this is what you have to, blot yourself out of all the noise and look at what the market is telling you. And you can see that, the market cut through this. This is a big, bad bull trap. So you can see this was a resistance area that was controlling this thing. And then eventually prices broke out above this resistance. But now they're breaking below this. So now all of these people are trapped. And this is what you call a bull trap, where something sneaks above an area. Everybody gets all lathered and excited about it. And now they're stuck and steaming. And if they don't get out, they're going to be in a world of tears. So this is a bull trap, a double top. It's got every ingredient, and you're going to see that. And I don't think that's going to be an exaggeration. And it says, I'm still short Tesla. It didn't close out. Yes, I'm short from 874. So yeah, you can add into, any decent rally. And so Tesla was trading at 100 times 2023 earnings. So it was trading 100 times next year's earnings. So let's say it just gets cut in half to 50, that cuts this thing in half, even at a 50 multiple. And, this is becoming a more mature company. And so, look, I don't get into multiples and stories and fundamentals and whatever. This is a picture that is telling me a story. So I'm just trying to go through some of your comments here. Better to use the daily or the weekly chart. There's no better, Devendra. I use both. To my mind, what I'll do is I'll look at the big picture, try and understand what's going on in the big picture. This is a weekly chart where each one of these price bars represents 1 week in time. And then, once I kind of understand what's going on the big picture, then I'll just toggle back and try and, set my trades up on an individual basis. So you can see that, again, here we have all of these patterns that were telling us a story way back here. You had the double top right there, head and shoulders. Here was a double top, head and shoulders. Here was a double top, head and shoulders. So basically that was your first neckline. Once it cut through here, then it was on its way to the next level. And now it's just stair stepping lower. Then you had all of these coil bars. So you had this enormous coil. All of these are inside day bars. So you can see all of those bars effectively were in this range. So for 2 weeks, this thing was just coiling. And the way I look at these coils is that it's building energy, right? So I think of it as like put your hand on top of a beach ball and you put it further and further down under the water, and then you let your hand off. What happens? It uncorks, right? The pressure just releases. But in this case, it's going to release to the downside because that's what these patterns indicated, that this was all distribution, meaning that the smart guys, including Elon Musk, were selling their stock to you. Now, they're not that generous. They're doing that for a reason. Bezos and all of these guys have been selling their stock. Foley at Peloton was happy to sell you his stock at $110 in Peloton, and now that stock's at $30. So this has been just a giant distribution. People have been getting out for a long time, and now the carnage is going to begin. Mark says, do you think that worldly? So again, you've got to eliminate that word think, Mark, from your vocabulary. The idea is not to think. This isn't about the worldly things. This is what markets do all the time. They go to a certain height. They can't go higher anymore. So, kind of the metaphor I gave you the other day was, you've been to one of those air shows where you see, those guys in those planes, they go up in the sky, up, 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 and then you hear the engine literally cutting out where it stalls. There's just so many G forces that it can do, and then it just cuts out, and then it just comes back down. And so, this is what markets do. They go to irrational extremes. And to my mind, Tesla was irrational for a lot longer. But, I forgot who said it, Greenspan or whomever said that markets can stay irrational a lot longer than you can stay solvent. So I knew that even at $600, this thing had no reason being at $600. But the markets can stay irrational for months and months and months, a lot. So if you keep trying to sell it here, you can go broke, but eventually it goes. So this has just been an irrational market. And now it's coming the other way. But, I just look at markets in terms of pictures. I look at it in terms of patterns. So I don't care if this is corn, wheat, oil, IBM. I just look in markets as, what is this picture telling me? Do I see a trend? Do I see patterns? Then I look for a particular day where I can isolate my risk. Now, as this thing starts gaining steam, it's harder and harder to identify your risk. But, to my mind, there is no risk in being short here. If I get short here and it goes up, I'm going to sell more. If it goes up, I'm going to sell more. If it goes up, I'll sell more. And then eventually it'll come back down. that's not a great strategy. That's, how you can really go broke, selling into, you can sell here and eventually go broke before it gives in. But to my mind, sometimes when I start seeing things, there's just no way that this thing is going back up. There's nothing that, is going to send this thing back up here. So, once you kind of understand what's going on in the markets, then you can, make more formative conclusions. And that's really what I'm trying to do at the Pattern Trader. So we can romanticize all of these trades and what have you, but, at the end, what I'm really trying to do is, I'm sorry, I'm just trying to open up an email just to give you a flavor of so the whole point of the Pattern Trader is that I try and educate you. We have, we've had a very robust week here, and this is what I send out every day, where I try and show you what I'm looking at on the chart and my rationale why I'm getting in something. So this was in Coinbase, that's trading now at 170 bucks, and I was telling our members to enter it at 193 a few weeks ago, and I said coin is a proxy for the overpriced crypto and NASDAQ growth stocks. I think these sectors have a long way to go lower. And this was, February 14th, about 2 weeks ago. So this is what I'm trying to do, is show you what I'm looking at on the chart, and then, explain what I do. So the idea is to inform you so that you can make these decisions for yourself. So you don't need to listen to these morons on TV or somebody in a chat room or something of that nature. So this is what, I'm trying to do. As it happens, it was an unbelievably robust week, and anybody who was following me should be making a ton of dough. So Simon says, with Tesla having a large range bar, would you put a limit order in? So, the problem is with putting a limit order in, as I said, is that, you may miss it. So you could stick a limit order in, and it's arbitrary. So where you stick this limit, let's put it at, 785, and if it just sneaks up here and gets to 775 and then dies, you're not going to be filled. So that is the problem and the limitations with a limit order. But you can always stick something up there and, see if it runs into you. Unar says, is coin an ETF? No, I believe it's a public company. It's Coinbase. It's a brokerage company for cryptos. Pedro says, would you look at FedEx? So I don't want to look at 100 charts. Like I said, I have a Friday session where I look at all these charts, and then you get to ask all the questions. What I'm trying to do, this week is try and kind of give you an overview, of how to look at the markets in a dynamic way. So this is, even with this very short view of, FedEx, I don't really need to peel out to the weeklies. I can just look and see, this is your double top. Now, tops don't have to be exactly, you can see one top is lower than the other. Sometimes one top will be higher than the other. One top can be lower than the other. But when you look back, both of these things look like the letter M. So when you see this M formed, that pattern equals trajectory. And so, you're now taking out multi-week lows, and, you're just in a profound downtrend. So stocks are about to get whacked. I've been saying this for a long time. And, I said that people are going to lose trillions of dollars. So this is just a very, very bad looking, ominous looking pattern. If you're long FedEx, you just see a huge, so here's the double top, head and shoulders. So here's the double top right there. And this whole thing is the head, and that's the shoulder. Here's a kind of a head and shoulders in here too. So this thing is really, really ugly looking. This these charts are telling me the end of the world. I said over the weekend in my video, and again, I'm very reticent to share these things publicly because, I know I've got a responsibility to thousands of people. And if something changes, I know that I can dynamically shift in my mind. And so I hate to put stuff out there. And, also it's very dangerous to put narratives in your head because then when the market changes, you have this fixed notion. But I put it out there and, I'll stand by it that, I've seen 4, possibly 5 huge bear markets in my career. 75, 87, 2000, 2009. And I think that this is setting up to be what could be even worse than 2009. So this looks very ominous, and we haven't even started to confirm this thing. So 200 would just be the start, the start of this thing. And sometimes you can just measure these things. You can take a short tape of, kind of the neckline to the peak there. So, from 210 to 320, and then you just shave $100 off that. And that tells you where this thing, could go to. So, I think this is frightening where this could go to. I think we are in a potential huge bubble market. We've had this experiment for 12 years since 2009. We've had this quantitative easing, all of these central banks just, printing money. And, to my mind, there's been just something wrong with all of this thing. Things have just gone up too easily. And now the air is being taken out of the balloon. And, I think you're going to get a lot of lead. Simon says, my 10-year-old asks if you wait to see an insurance paper form under the neckline, then you place your pending order. So, again, I just look for these patterns, and then wherever I see these pockets, of key reversals or inside day bars or what have you. But it all starts with a visual. And then people, talk about take profit and whatever. Well, to my mind, this thing looks like it's going to collapse. So, I'm not going to put my take profit too quickly. So, sometimes you get a breakout, then you get, retest of the neckline. So, if I get a, huge move, sometimes I get out, then I'll wait for this, I'll get back in. So, I've given you a short glimpse of, how I approach the market. So with that said, I'm just going to throw a link to my book in the chat box here. Dwight, if you'll put this on YouTube. And the nice thing about this book is it's a pay what you want. So basically, this is my lazy way of my 5-step trading execution plan that I've talked to you over the last couple, days. And the nice thing is, whatever you pay for this book, 10 bucks, 20, 50, I'll take that amount and double it and send it to my favorite charity, the American Childhood Cancer Organization. So I have sent in tens of thousands of dollars. So every book sale that I make, every royalty I make on my books, I take that amount, I double it. So I actually lose money, but I give it to a very worthy cause. So that when you pay for this, I think you're going to get some great information and your money is going to go to a great charity. And so you just click this link, go to this little thing, and then, enter whatever you want, 5 bucks, 10 bucks, 50 bucks. And so I'm going to probably just end it there if there's not too many more questions. Again, like to just answer questions on the methodology. I'm not going to go and look at hundreds of charts. We have something on Fridays called the Underground Trading Session. If you want to do that, I go through each one of these charts methodically, show you what I'm thinking for each one of these markets, and then you have a chance to ask your questions in those sessions. Pedro, thank you very much. Eric says, the first step is looking at the trend. What are your thoughts to overrule the head and shoulders pattern in the, so not really sure what you're talking about, the head and shoulders there, Eric. This is in a profound downtrend. I think I showed you all of the bear price patterns, and so Udek's asking where the head and shoulders are. So basically, the neckline is simply where the line, you know, connects throughout the pattern. So you can see this is the entirety of the pattern. This is the entirety of the pattern. So, you know, I just run a line, you know, through this entire thing. So this is called the neckline. It's simply a line that basically, you know, conjoins all of the lows. So if, you know, I basically draw a line that starts through all of the lows, that's called the neckline. And typically that is a barometer to confirm what we're looking at, because sometimes you'll see patterns and it'll stop short of the line and go like that. In that case, it's called a busted pattern, where the implications of what, you know, we were looking at, you know, are busted. And sometimes markets will do that. They'll trick you. They'll get like halfway here and then go because it didn't confirm it. It didn't cut through this neckline. So effectively, as much as FedEx has, you know, come down, it still really needs to come down and cut through this thing to confirm it. But a neckline is simply a line that is drawn through the lows of the pattern, and it confirms what we're looking at. And then basically all kinds of things can happen around the necklines. You know, usually you get some kind of follow through, and then it's not unusual to get a re-challenge of that neckline. You could even peek back above here, come here, and then once it cuts through the low again, like IGV, then you know that this is on and this move is real. And so IGV is going to 270 as sure as I sit here. So it's trading at 316. So you can make up your mind whether you know, you want to sell it or not. So Pedro says this FedEx chart makes things so clear. So yes, this is a weekly chart, and most people are looking at 15-minute charts. So if you're looking at a 15-minute chart and this is all you see, how can you know on a global level? How can you predict that FedEx is going to go to $100 a share without understanding history? And that's, you know, I think a metaphor for what we're doing in government and generally in society. People are making these lunatic decisions and they don't understand history. History repeats in countries, in societies, in nations, in charts. And if you don't know your history, you're bound to repeat it. Barry says people do not have permission in their accounts to short. There are, you know, certain ETFs that you can use that are inverse ETFs that, you know, so if you want to bet on the downside of the QQQs, you would buy the SQQQs. So there are different ways to, you know, to peel an onion. So these are the SQQQs. They're going in the opposite direction of the Qs because they're a triple inverse. So this will go 3 times what the Qs. So if the Qs are down 2% in a day, SQQQs will be up 6%. Simon says, sometimes I have a hard to wait to sell a rally. Not quite sure what you mean there. So being European, I can't trade ETFs. So again, just find an instrument. It doesn't matter, you know, find a picture. What I'm trying to say is that you can overlay this methodology on, you know, any chart. So there are CFDs in Europe of all kinds of European companies, Nestle's and Porsche and what have you. So I am just trying to demonstrate a method. I'm not trying to show you, you know, single trades. I'm trying to inform you of an approach that I use to trade thousands of markets. So, you know, there are literally, you know, tens of thousands of stocks. You know, I talked about a stock screener. You know, this is called FinViz, and you can literally, to your heart's delight, look at thousands and thousands of patterns. Go to a screener, put in whatever you want to look at, NASDAQ stocks, in technology or what have you, price above 50 or what have you. And you'll literally get, 8 pages of stocks that you can just cruise through. So wherever you are in Japan or the Middle East or whatever, there are, instruments that you can trade. And what I'm trying to do this week, without getting focused on Tesla or IGV, is show you an approach that is agnostic. I don't care what the trading instrument is. I was a futures broker. I traded cocoa and live hogs and pork bellies exactly the same way that I would trade the SQQQs or IGV. Kingsley says, how do I become a member? Thank you for asking, Kingsley. I don't really do sales. I know most people sit on these webinars and they wait for, the sales ploy. I'm not going to give you any of that. You can make up your mind. I can't lead a horse to water, but I think we do a phenomenal job for our members. Again, you can go to our review website. I'll show that to you tomorrow so you can see what others have to say. And Dwight says, send an email to support@thepatterntrader.com. But Kingsley, we will send you an email after these sessions have ended to invite you to join the elite program. Again, this is not something you just click and sign up for. We have a team member talk to you in depth of what's involved. And so all of the moving parts. And again, the idea is to learn while you earn. So most people figure, well, I'm going to get in the elite and I'm going to get all these great trades and whatever. But if you get all these great trades and then I get hit by a bus, what does that help you if you're not learning? So really what the whole intent of the elite program and the pattern trader is to inform you how to look at these markets, where you don't need to look at these, $1 million analysts from Goldman Sachs, share with you things that are just, crazy. So there's a lot of questions about Alibaba. Alibaba is going to announce earnings tomorrow. I bought some call options yesterday, and ironically, with the stock getting smacked, the stock, the call options didn't go down that much. So I don't know if that tells me anything, but we'll know tomorrow before the bell that. But Alibaba looks terrible technically. It's at the bottom of a what could be a rectangle, but it closed very badly. So. I think that the technicals look pretty poor, and this thing's probably going to go and make new lows at some point. Mira, you're welcome. Pamela says IGV, QQQs at Robinhood and Vanguard. So yeah, these are instruments that most of you can So Garrett, the link to the book, is in the chat book. You only look at stocks with a minimum price of how much? No, I look at everything. I was trading QuantumScape all the way into the hole. I mean, I was shorting this stock from $60 all the way to 20. Obviously, the lower something gets, the risk reward, of shorting something is not there anymore. But I was shorting QuantumScape all the way down. And this thing, I said from 6 months ago that this was going to be a stock under $10, and we're not too far from that. And again, it all starts from a pattern. So I was trading this thing based on these big patterns here, these double tops here, and it's just been, pretty fertile trade. And then sometimes they just go off the board because they go too low. I've been shorting Beyond Meat from 200 and now it's under $50, and once it gets under $20, then you got to go look for something else. But I will short a $25 stock. I will short a $35 stock. $35 stock that goes down $3 is down 10% on money. So I don't really look at price. I look at patterns. I was looking at Lucid. I've been shorting Lucid all the way down from $40. And, this thing's just going to be, driven right into the ground also. So I don't really look at a price of a stock. I just look at risk and reward. So I don't really have any fixed ideas. So, this is Lucid. And I've been shorting this thing from $40 based on, just huge bear patterns. So that told you at $35 that this thing was over. So all the way down, I've been taking bites out of this thing. And eventually it'll also be a $15 and a $10 stock. Everything is going to zero. Rob says, I feel guilty from profiting from these free webinars. I'll be joining your program soon. No worries. I just try and put the information out there. So to me, life is paradoxical. In golf, the easier you swing, the harder your ball goes. And to me, in life, the more you put out, the more you get. So I'm not looking to get anything from these, webinars. I don't care whether you sign up or not. Frankly, that's your choice. But, and people always ask me, if you're making all this money, why would you spend all this time, doing this? And look, I'm watching these markets. I love, jawboning about markets. I love thinking about markets. This is what I do. It's my passion. And really, I have found a gratification, of giving back. When I started the Pattern Trader, and when was it, September 2016, I had no idea what I was doing. I never understood online business. I still don't understand online businesses. Mine is an online business. I have a whole team doing that. I do whatever I do here. And I had no idea what I was getting into, but, I have members from years and years and years ago. I had a member that signed up right at the beginning, Prashant. He may or may not even be on this webinar. And then over Christmas, I get this, FedEx box, and I, look at these pens, and I go, I didn't order this thing. And I'm looking at this thing, and Prashant sent me this hand-engraved set of pens. Now, I'm not telling you guys to send me gifts, because this is not what I'm trying to. What I'm saying is, Prashant joined up in 2016, and he was in South Florida, and he said, would you meet me? And we ended up having a cup of coffee. And to me, that was one of the most gratifying experiences, meeting somebody from somewhere across the world that, I met, doing what I do, and I was able to give back. And Prashant has made hundreds and hundreds of percent. He's actually managing money now using the methodology that I shared with him. So being able to, share, with the rest of the world, being able to effectively inherit a second family. I've had people in my Friday sessions. I've had those people have been with me for years. I see, the same names for years. And so it's a gratification way beyond, just making money in Tesla today. And, I never thought, what would happen when I started this business. And so to me, it's paradoxical. The more you give, the more you get back. And I just get tremendous validation and affirmation, and, I'm able to help people, and it's pretty cool. So it's you guys I have to thank rather than the other way around. Natalia says, thanks, Mark, for the explicit demonstration of a scientifically recognized methodology. And so Natalia, thank you for that. And yeah, so about a year ago, I know I've just been doing these things kind of haphazardly for a while, but, I assigned a task to our team, and they spent weeks and weeks, looking for studies. And there was one study that, studied 35,000 trades, after a double top was formed. And they found that for 100 days thereafter, the market went, in a certain direction. So this is, it turned out to have some scientific validity. And what it also shows you is that day trading doesn't work, and there's all kinds of things. And but thanks for bringing that up, Natalia. Linda, you're welcome. Verity says, Donkey. I'm a South African, so I recognize the Afrikaans birdie, believe it or not. John says, great webinar today. I shorted Tesla early today and made a few hundred New Zealand dollars. Thank you. I have a lot of questions, but the tier's not the place to do it. So you're welcome, John. How do you register for your Friday session? Go to the support at thepatterntrader.com. The link is somewhere in this Vasilios says, I just bought your book and your weekly service. So thanks for that, Vasilios. Look forward to seeing you. Ricardo says, how many hours a day do you spend trading? And the idea is, if you're trading effectively, the fewest as possible. All you have to do is put your buy stop in and walk away. So when I send out a trade or a sell stop or whatever it is, so this is what this is designed to do. So, I give you the chart and then I actually give you the trade, put your stop there, put your stop loss there, put your take profit there. And that should be your day. And so it's supposed to be a set and forget. So if you're trading effectively off the daily bars, you shouldn't, have your eyes glued to the screen, right? You should be able to just put your parameters in and walk away. Now, there's a whole bunch of volatility now, and it's not that it's a different game, but the best kind of trading is to spend as little time as possible. It's being smart. There's a difference between working hard and working smart, right? You can work 15 hours a day for minimum wage, or you could put 2 trades in a year and make hundreds of thousands of dollars. So, it's kind of unfair the way the world works, but that's just the way it is. Lisa's always great stuff. Garrett, thank you. Great session. Enda says, you're welcome. Kayuta says, thank you. I'm really learning. So you're welcome, Kayuta. Linda, thank you. All right, guys, I think I'm going to end it there. I'll see you back for the last session tomorrow, 4:30 Eastern time. Be safe. And it's all about risk and reward, right? So understand where your levels of risk are, and the rest will take care of itself. All right, guys. Thanks, Dwight.
No problem. See you tomorrow.